Good morning, guys. Good morning, good morning, good morning. Let's share the screen. Okay. Good morning, guys. How's everybody doing? Give it a few seconds to let everybody come into the room. Somebody give me a sound check. Let me know if you hear me okay. Hi, Miguel. How are you? So, before we start everything, I got to tell you, there was, I wish I was there with you today. There was such a layup trade in FX. Let me do the FX view. Where's my here's FX view. All right, I just did this trade myself. It was just, I mean, maybe it was just blindingly obvious to me, but I don't know. So here's dollar CAD, right? Here's dollar CAD. And we have, this is the 1 minute chart. We're obviously starting to trade trend, but most importantly, 8:30 in the morning, we have the Canadian ADP, which is very weak. And remember, yesterday, BOC comes out, and yesterday we're trading the 125s because it was running to 125 after essentially a dovish BOC that said, yeah, we see inflation coming. We're not going to do anything about it just yet. Today, the very weak labor conditions in ADP, whether that's true or not, definitely add to the idea that there's nothing forthcoming out of BOC anytime soon. So we're trading basically at around, like, after the news comes out, 8:34, 35. We're trading essentially on the lower end of the moving average envelope, and I come in pretty much at 41, just essentially looking for the 50 run. The reason why that's such an obvious trade is because you already have a lot of funda on your way. 50s haven't been touched yet, which means there are stops there. So there's just incredible itchiness to run the 50s. And of course, it takes about 5 minutes. And they run the 50s and they run through the 50s, perhaps even higher. From this point on, this is what's interesting. From this point on, it's a 50-50 toss-up. Could it go further? Yes. Could it retrace a little bit of profit taking? Yes. The conditional probability, which is the really interesting probability, the high probability is conditional on two things: news, tone, and the levels not getting taken out. Once the levels get taken out, yes, you probably could have a squeeze. You may have further continuation, but it's a completely different bet. And the conditions weaken, not strengthen, actually, on the possibility of it going higher. It's running right now, obviously, so it looks good for continuation trade. But the interesting thing is that when you kind of consider a lot of these intraday setups, it's really the conditional probability that you're asking. You're saying, given that this has happened, what's the condition, and these are the conditions, what's the probability that this is going to happen next? And obviously the probability was super high because you had a magnet coming in. Just as the whole idea of doing appointment trading, of doing trading during the opening of the market hours, is essentially a conditional probability trade, which is what makes it that much more accurate, because it's conditional not just on the price action, but on the context within which that price action is taking place. And that is kind of a very nuanced concept that I picked up from oh man, what is his name? Hang on a second. He's a very famous AI scientist. Hang on, let me look it up. I was listening to this. Oh man, hang on. I gotta go find it. It's Better System Trader. Ernie Chan. Ernie Chan is a former hedge fund AI guy. And he was talking about how, when you're talking about the 70% probability for a trade, that's an average of all trades. And what you're really interested in is what's the 70% probability of your next trade, right? It's the next trade that matters. It's not like the average of all trades. Now, obviously, you can't always create a conditional probability of your next trade, but when you do have circumstances that combine, that's when you have the highest, highest possibility. I mean, that's why you see when Kathy flounders, it's because there is no funda, there is no real event risk against which she can trade, because it's that event risk that creates the conditional probability of far higher accuracy than just simply price flow. Price flow without fundamentals is a tad bit more than random. And I don't mean that fundamentals are in some ways a nirvana to trading, because fundamentals without the context of price flow are also completely random. In other words, you can't bet on good news if it's not supported by good price action, but and positioning, But the point is that when you have those three factors together, sentiment, price action, and news, the conditional probability becomes so much higher, and that's where it becomes a tremendous amount of value. So hopefully that's interesting to you guys. Dollar CAD was just that example this morning, So other than that, we're opening up here. Let me see who's in the room. Let's see everybody come into the room. Good morning, guys. How's everybody doing? Say hi to me in chat. Ask Boris. I may have to step away for a couple of minutes. Hopefully not, but I have a delivery coming in, like a large delivery, and it's between 8 and 12. So Murphy's Law, they're probably going to come in before 10 o'clock in the morning. But if they do, my apologies. I have to step away for about 3 or 4 minutes. Other than that, we'll try to trade all the way through. The other piece of business that I want to let you guys know is tomorrow I have to cancel the trading because I'm doing trading battle with Kathy and Regi. I'm hosting a trading battle, and that's going to run way into the New York Open probably with all the post-event stuff that we have to do. So my apologies. I'm going to leave you guys to it for tomorrow, and then we come back again for next week. But the concept that I introduced to you guys yesterday. Oh, sorry. One more piece of house business. You saw that I posted in the room here that the trend view has been updated. All you guys got to do is just simply click on that link, delete. Let me just sort of show you what you want to do. You want to delete. I already have this, but just let's just go through this so you guys can understand it. So you delete your current trend view indicator. You go into your indicators. You go into your favorites. You go into trend fade. You select that, and if you select that, and if you've done that properly, you should have the buys in green above the candle, so they're easier to see. The sells in black below the candle, so they're easier to see. And that's all it is. It's just a cosmetic change on the structure. But hopefully you guys can get it working. Let me know if you got it. Let me know if it's working well for you. I think I kind of let me see if I jotted all of this down. Yeah. So I think I've sort of synchronized myself on the key starting hours for appointment trades in the indices, and then I'll come back to the currencies as well. But in the indices, where these trades work really, really well is I'm actually going to type out the hours in Slack. So this is all New York hours, 20:30 New York, then 3:30 New York, that's the European Open, then 9:30 New York. This is the first trade after those hours, and 15:30 New York on the close. Okay, so this is the sequence of hours. Let's just go to yesterday. Where's my thing? Let's go to yesterday to the 14th and kind of run through that subset. So remember, after 2030, here's the buy signal. First signal either way after 2030 in NASDAQ. 66s goes for much more than 5. Obviously makes 5, but if it easily makes 10. Then we come down to the 3:30 hour, okay, and it's a little bit stretchy, but you definitely make the 5. It's you're coming in here at around. Is this one? I'm trying to figure out. It's this one actually. It's a 79 on the European Open, and it goes all the way out actually to 94. So more than 10 points on the European Open. So that's 2 for 2. Then we go to the 9:30 hour. Where's my 9:30 hour? That's 9:24. This actually what doesn't look promising, but it did work if you were just modest enough to trade for 5. As a matter of fact, when we signed up, I said this is our trade. I just don't have time to hold it, but it should be good for 5. And it was 83, and it definitely went to like 91. So almost to 10, but definitely made 5. And 5 is all you want to do because you just you don't have the again, it's the conditional probability is that you have confidence that's going to go that far. You don't have that much confidence it'll go farther. Sometimes it definitely does. So that's 3 for 3. And then we go to 1530, anything after 1530. And here, 1530 is, sorry, this is 1530 is over here. This is after 1530, which is the last half hour of the New York session. You're short here at 07. Goes up a little bit against you to 12 and then drops like a stone all the way down to 77. So more than enough for 5. So that's already, was that 4 for 4? Now we come in to 2030. We actually don't have, the 2030 there was nothing after 2030. And the trade here, I mean, I generally want to give myself about an hour. So there was no triggers here in an hour. The next trigger after 2030 was actually 2230. If you were in Asia and patient enough to hold on for it, that still would have worked. You're coming in at 99s, we went all the way up to 20. So again, more than enough to give you a clean look. Then we're going to come in at this 320. This is 328. So not 330. And again, I want to be kind of very firm about this. I only want to take signals after 330. So we just kind of missed this. This would have actually, this is 6, drops down to 95. Would have still made you 5 points if you were willing to scalp it. But this certainly did. This came in at 22. It went all the way up to 34. Plenty of tame. And so now that brings us now to the 9:30 hour. So far we literally went through 6 trades, right? Was it 6 trades? Yeah, 6 trades over a period of 36 hours, and for 6 for 0, 6 wins, 0 losses, and that's kind of the power of what I call the conditional probability trading. Does that make sense to everybody? Is everybody clear and confident with what I'm doing? So I think you probably could apply a variant of this. You certainly could apply, I believe, the 2030, the 330, but then it would be the 1030 for currencies. So let me just sort of clarify this. This would be indices. Let me put this on the screen so you guys can see this. So this is indices. I misspelled indices. Okay. And FX would be 2030. This is all New York Times. Again, sorry, but like that's the only way I can think. 330 and 1030. Okay. Now the reason why the 1030 is a really, really interesting timeline, and I would, we can take a look. We can take a look at. Just bear with me a sec here. We can take a look at Euro, which definitely worked. And we could certainly take a look, I think, at Caddy too. Cable is always problematic. I'm not sure if cable worked yesterday. Cable is just such a pain in the ass. I really hate trading it. But let's let's look at Euro yesterday. So today's the 15th, so we go to 14. Okay, so let's look at Euro kind of, the 330. This is 330. Yeah, this is 330. So again, we're just only looking for 5 points. Here's the 330 signal over here. It puts us in the trade at 1786. It drops all the way down to 80. So it just barely makes 5 points, which is all that we can, reasonably expect. So that's fine. And then we go to the 1030 timeline, and the 1030 timeline. So here we are. That's right here. This is the candle here. It's 22. We're looking for 27. It basically makes it over here. 28 makes it over here. But it really just continues all the way through the afternoon. So if you came into the 1030, you definitely had some continuation moves. Now on the caddy, let's go to caddy here for the 1030 move. That was interesting. This caddy had some crazy moves yesterday. So where are we? So caddy, that was 12. Yeah, that actually, I remember that. It did work. You just have to be very nimble with it. Okay, so caddy comes in. This is, remember, the caddy is very volatile because we have post BOC. We're just starting the BOC presser. So this is post 1030 trade. You take it at 12, goes down to just literally keeps you from stopping out. Goes down to 96. 92 would have been your stop, and you're looking for 17. So it usually hits it over here, but then it obviously hits it into the 23s over here. So you really had, a lot more volatility because of BOC, but you still nevertheless managed to, to survive it. Let me see what I think what cable did. Cable was just I really hate trade cable. Let me see if cable traded well. No, of course, cable gave you just, no, actually it didn't, because this is 23. That's it. That's the key point. It's after 1030. It's the cutoff point. This is early 23. We're looking for post 1030. Here, cable actually gives you the right trade. See, the value of this setup is knowing what time to launch it. Even half an hour earlier, and the variability gets much worse. It's literally, I don't know what is 1030, like, what is it in London? That's +4, it's 1430. I don't know why. I feel like maybe it's the fact, I think the option expiry is around between 10 and 1030 for most option expiries. It's got to be some kind of a intra-dealing deadline where there's a lot of settlement coming in, at this time frame, that creates, I think, these really interesting dynamics. But anyways, that's the bottom line. On FX, it's kind of a 1030 starting point that gives you the really interesting trades. Actually, let's go. I'm just curious now. How did cable do the London Open at 3:30? What did it do for us? So it comes in at, this is 3:30. It actually, it wouldn't have been horrible. It's a 48 entry against a 34 low drawdown, and obviously that goes up to 61. So yeah, you certainly had, you're trading with the opening flow. It's the opening flow, the impulse. You're obviously going to get some reaction. You have to give yourself room, but the bigger reaction, the bigger flow is the one you want to be with. You can't always be precise, but you try to be as accurate as possible. So that's kind of where FX was yesterday. Let's go back to, did I just put FX in here? What did I just do here? So this should be NASDAQ then, sorry. Okay, NAS is ripping a little bit here, huh? Oh no, it's not. I just, NAS is still actually underneath the 200 SMA. So it's in sort of a negative bid. We have a trend sell on NAS. And hang on just one second, guys. I just want to see something. What do you call it? Excuse me. Oh God, sorry guys. My apologies. And essentially sells it all across the board. I mean, we're underneath the moving averages on all the indices, so it sort of seemed to be a little bit biased down. We got about still 10 more minutes before the market opens, so I don't really if we want to fool around, would I fool around and sell? I think I'm going to sell the NASDAQ 94s right now. So I just sold 94s for just 5. Let's see if we can, if this is just a scalp. I mean, it looks like we're weakening. Let's see if we can come back and test the bottom here. It's just, it's not just me fooling around. A little bit of a scalp trade. Let's see if it plays out for us. But generally, we should just be very patient waiting for the market open. Overall, the price action, I think, the price action is starting to get a little heavy. We're so ridiculously overbought. I mean, I tell you what kind of brought it to my mind's eye. I was just shocked. By accident, I was just kind of looking through charts. Look at this. I want to show this to you. This is friggin' insane. Look at that. That's the weekly. That's the NAS weekly. Okay. I mean, you cannot tell me that this is one of the most parabolic charts you've seen in a long time, and that we are due. I mean, I'm shocked if we don't take 15,000 and then come back down for a couple of thousand NAS points. I'd be shocked. That kind of parabolic run just absolutely needs to see some relief on the charts. So, I think the trades are going to be to the downside soon, but for now we're just putzing around. Anyways, we'll let the price action dictate the trades on the very short-term time frame, but just long-term time frame, it really looks like NASDAQ is just grossly overbought. So we got about 9 minutes. Any questions? Anything else on your mind, guys? Everybody got the new trend view indicator working? Let me go to the three screen view so that we can watch all the indices, so I don't miss any trades. I'm going to call them out, like Karen wanted me to, so that you guys, see the index prices, and then I'm probably going to take them. I'm going to take them off screen because it's just faster, but then I'll bring the screen into view so we can monitor them live and see how the trades go. Because I think that's the way to do it. I wonder. Hang on a second. Let me see if I'm going to change my configurations. Let me see if this is going to be a better config. If it's easier for me to do this. Just bear with me a second here, guys. Let's see if this plays out. Let me see if I can do this. Yeah, I can. Okay, that's good. All right, so I'm going to do this on the lower screen as far as execution goes. So we're a little quiet. I think, honestly, guys, I probably should. I'm just going to close this out flat. I'm just closing out the NAS flat here at 94. The only reason I'm doing that is because it might come down, but I'm always wary that they like to rip the face off. They like, look at this, as soon as I do it, it comes down. They like to rip it up on the first opening print and then take it down. And I don't really want to, it's a completely unnecessary stop if we get ripped up to the upside. Although the trade is working to the downside pretty well. Basically, just very, very quiet. Okay, what do we got? We got 7 more minutes. Man, it's kind of a slow opening rotation today, which you can tell because NAS is flat. Dow is a little bit further down, and Dow is a little bit deeper to the downside. Multiple sell points on the Dow here. and the S&P is straight down. And you see the little games they're playing right before the open, right? They just, they took it down, rip it up. This is very common. Yeah, they might rip it through the 900s on the open and then just take it down like a stone. So we'll watch. We'll watch for any signals that are legitimate here, and then whatever is illegitimate as well. Anybody trade? Who's in Asia? Anybody trade the Asia Open yesterday off the indices or even tried? I really recommend it, especially if you guys on the U.S. West Coast. That's such a layup. It's a 5:30 in the afternoon trade. I love that trade. That trade is just a very, very clean trade most of the time, and it's universal. In other words, the Asia Open flow, I think, works Nasdaq, Dow, Euro, even cable. What am I saying? We got 4 minutes. Let's just take a look at did it work in cable yesterday? I'm actually curious. Let's look at cable, which is the world's most hated currency. So we want to look at the 2030 starting timeline in cable. Late, we didn't have any signals. We didn't have any signals to about 2045, and they were pretty much at the upper end of this decline. But if you were just not greedy, went for 5 points. Actually, cable was good for, this is a 31 entry, and went all the way down to 21. So it was good for 10 points. But if you were just not greedy and took 5 points on that trade, it was a nice clean trade. So even in cable, it could have worked. It could have worked totally. Okay. All right, we're back up to opening 27. One thing I haven't looked at, I totally forgot. Let me just look, see if what did we have on the fund today? We had the bad Canadian ADP. Industrial production was a little weak. Powell's gonna yabber on again. That's it. So Powell's doing the second day of testimony. Usually it's never a big market mover, but we'll see. All right, 2 minutes to the open. Oh, we actually have, what am I looking at? Oh, Dow is got a sell signal. Oh, is it the Dow? Yeah, it's Dow. You know what? I'm gonna play that just for shits and giggles with a 40-20. It's not a setup, but it's kind of, I'm sort of, okay, so I'm short Dow here in, what did I just sell Dow here? I sold it at 68. Oh, I wonder why this didn't, hold on a second. I sold it 36s. So I'm looking for 16, but for some reason, my whole thing just didn't work here. My applet didn't work. So none of my stops and none of my targets are working. Okay, I'm gonna have to do this manually. I'll do this manually and I'll bring it. So basically I sold 36s looking for 16 on the Dow. And man, now I can't find it. Sorry guys, my whole okay. All right, you know what? I'm just going to close it out right now at 25 plus 10. And now I've screwed myself with this stupid Windows thing. Hang on. I hate having multiple screens with different screen resolutions because I can never, I have all these, MT4 is the world's worst little, Where is this thing? Can I move this off? I can't grab this. Where does this come up? Where is that coming up? On which screen is that coming up? It's off my screen. Okay, you know what? I'm gonna have to kill my MT4. Okay, and then restart it. Sorry guys. Okay, anyways, that was good for 10 points, real quick, and now we're jumping right back up because the market basically popping up on the open. So I'm gonna watch the open right now. Don't text me in Zoom. Text me in Slack. I'm ignoring every single Zoom thing. I can only keep my eye on one thing. So okay, so Dow really, they ripped it up as you know, usual fake out move. Let's see what's going on over here. You know, I am going to see this 692, 97, 700. I am really tempted to short this, not for any reason, but just because I'm gonna short this 705, 706s. Because I've seen this trade so many times before. And let me 40. Okay, sorry. So what I short? I shorted 6. I'm short 6, looking for 86 pullback. I may get tagged for 46. Oh, I have a trend sell in. I have a genuine trend sell in. Sorry, I missed it. I can't. Sorry, I'm screwing around. I'm sorry, guys. I should have been looking at the signals. A genuine trend sell that totally would have worked in Nasdaq. My apologies. I started dicking around with the Dow, which did not have a signal. So basically, I'm short 6s, looking to take it back at 86 right now on a Dow, and I genuinely missed a very, very good trade on Nasdaq, which was like 30 points to the downside of Nasdaq. So now we'll have to see if we can just, you know, make a little bit of the money on the Dow. I'm actually going to just we'll see. I can't even now Dow is gonna go back up against me. Sorry, I butchered the open because I didn't think they were gonna create a sell structure so fast for myself right off the open. So let's see, let's see where we're at on the Dow. I'm gonna take this off screen because it's a little distracting. I'll keep you updated on where that trade goes. But you see the Nasdaq sell right over here was just super easy. We'll see if there's more trades between the 9:30 and 10 o'clock hour on the signal side. All right, so obviously the Dow gave me all of 8 points, and then now it's going to rip against me. So that was a dumbass trade, and it's going to take us out. I'm just waiting to see if I can survive the stop. Nope, I'm out. So Dow ripped to the downside. And that was dumb. I was fading this move. It's a good example of why I should only follow my own signals. I was fading this move off the high. I had the right idea, but the point is, having the right idea is not enough. You have to be really precise on the entry. And because I just hesitated on the entry, if I had the entry at around 20, it would have been fine. But I didn't. So so that blew us up a little bit, but not much on the Dow. NAS continues to, wow, really rip to the downside. All right, let's just focus on seeing what signals we can find on the move here. I'm actually I want to go back to Dow's breaking fresh lows. I mean, Nasdaq's breaking fresh lows. My apologies. I'm short at the 40s in Nasdaq. Just, I mean, to see if it's going to make any fresh lows. But again, not a genuine trade, but I'm going to get my fives over here. Yep, I'm going to get my fives. So I got 40 to 35 just on a fresh low break over here. So that worked a little bit. Again, not the right trade. This would have been the right trade, but I'm just trying to get my pride back. Oh, okay. Let's get interested. So we finally have something genuine setting up. Dow is setting up as a buy trade. Let's get focused on that. That is a buy for us. So we're in at 15, and we're going to we're in at 15. It's 25. We're looking for 35, but I may take it earlier just because. There we go. Oh, it almost went to 35, and it did. It did. So that worked. So the Dow went 20 points our way, straight up. Kind of topsy-turvy trading, but this was a proper setup. It was you took that trade beautifully because the buy signal actually positioned you perfectly for the entry. You got full 20 points on that. We got 5 points on the continuation trade of the Dow, but we should have been over here. And now we basically just twiddle our thumbs. But you guys get the idea of you caught the Dow and the Nas. Good job, Connie. Good job. Good job. Good job. The Dow was super fast, and the Dow I think actually may have a little bit more room to go because Dow clearly is bid. So if you're in that Dow, you might be able to milk it for more than what you got it for. So I'm just watching, watching the flows. The next interesting signal to me, it's not as predictive, but I really like it still. Is like the 10 o'clock signal, sort of like the first half hour. Where does the market want to go? Usually that signal, trend-wise, is a very decent signal. And then after that, honestly, it doesn't matter if the world comes to an end. The single best thing to do for us is to walk away from the screens and not come back till 15:30. If you're trading the 1 minute chart, it's completely futile to try to catch every twist and turn, because in the end you give back everything you gain, because you literally have no edge. You're literally playing against the casino at that point, in terms of algos, market makers, everybody around you. The only times when you have the crowd, the will of the crowd, really express itself in a fully concerted manner is at the beginning of the market and at the end of the market, when you have lots of we're looking for one-way flows, because that's where we trade continuity. And continuity means one-way flows, and the only way you can get one-way flows is when you have the crowd, crowd on your side. So, so that's basically it. All right, let me see what you guys texted me in Zoom, since I totally ignored your chats here. But please don't text me in Zoom. Where are you? Yeah. So, okay, everybody. I already gave you guys the access to the trend indicator. Hang on a second. I think I'm gonna have to go to resolution, same resolution across all my screens. It's really killing me. So the access to trend indicator is right here. You just literally click on it, and it will automatically put it into your favorites folder. It's a private indicator. No, it's only available for BK BK members. Look at Nas. Nas is really pressured. I wonder if is Powell saying anything? In a situation we can taper. Oh, I think I was wondering why anytime you see Nasdaq diving, it's because somebody is talking about possible taper, even though yields are really down. We're at 131. I mean, it's interesting that the 10-year is pricing in a depression, which is fascinating. But NAS, I think, is at this point so done to the upside that even a whiff of tightening of liquidity is going to take it down. Because it just basically been running on free money for a year. So, what's interesting is if we look at, we took out the 4,800 level here. Took that down. I'm actually, if you guys want to, again, this is not a recommended trade. Oh, wow, it's too late. I was like, let's buy this, because when they trip the level, it's always a good buy. But like, that was super fast. That already made the full 10 points on the buy. Now it's gonna just because what they do is they trip the stops at the round numbers, and they always try to cover it. It may be worthwhile to kind of play this to the long side. I don't know. Do I want to take this? Should we play around with it? We gotta have a green candle. Unless I have a green candle, I'm not even gonna attempt to pick a bottom. Ugh, God damn it. Of course it runs away from me, but let's give it a shot. Okay. This is just for shits and giggles, totally. Okay, I'm long 12s. And I'm looking to basically see if we can get 17. And maybe we'll get 17 if I'm right. And there we are. We got 17. So again, just a what I call a scalp from the school of hard knocks. The reason why I felt confident, again, conditional probabilities. It's not like just because you break the OO level that you think it's going to be a great trade. We had massive sell-offs prior. We are incredibly extended off the moving average envelope, so much so that we are literally in outer space. We're not even in white space, in outer space. We printed a green candle, meaning that the buyers really did come in underneath the 1480. So it was worth a 5-point scalp. That was all the reasons for why I scalped this, which I couldn't obviously explain in the heat of the moment, but at least now you understand my methodology. And actually, it's worth, trading it. I'll tell you one thing that I find super fascinating, incredibly interesting for myself, is the moment I started to reorient myself into these appointment-like trades, into thinking in terms of conditional probabilities, into using my signals very much in conjunction with the context of the day and the context of the price in the day. My other bullshit trading, my kind of scalping trading, has improved markedly, because I'm thinking in exactly those three terms. Where am I? What am I doing? What is the price action showing me? And if I have sort of like all those three things, in conjunction, I have decent opportunities for very quick scalps. And obviously, these are very quick scalps. You certainly don't want to be married to these ideas, because you're just reading the very quick imbalances in the marketplace. And taking advantage of those quick imbalances. And if they don't happen, you just walk away, because it's by no means a positional trade. NAS could be 200 points lower before the end of the day today. Or this could be the low of the day. Like, one of the things that Linda taught us is that the first half hour, you're either going to make the high or the low of the day most of the time. So you need to watch this level. So, if we're, if you look at this market at 11 o'clock in the afternoon in New York, and we're trading in the 80s, 90s, that's a pretty decent possibility that we made the lows of the day on spike lows. But you won't know that until about 11 o'clock at time. But anyways, the point is, putting price action within context, I think, is so interesting in terms of sharpening your skill set of when you want to do something, and when and 90% of the time when you don't want to do something. So hopefully you found that interesting. Your sell signal came at a different point. Jason. So Jason, are you using futures or are you using CFDs? Let's start with that first and foremost. Jason, futures or CFDs? Okay. I'll let you answer. You know, I'm happy to work with you, but you got to work with me. US 100 CFD. Okay. So this NAS 100. Okay, let's see what because some, you know, obviously 95% of the time the signals are going to be the same. Yeah, you're right. You're right. So why did that come in on a different signal? Because CFDs are derivatively priced off futures, and obviously every broker is going to have a very just a tiny little differential. The way these signals are generated has to do with the highs and the lows of the particular candle. So in this particular case, I think what happened is, what is this? Yeah, what happened is, what the hell is that the highs and the lows of this candle? It's really interesting. Hang on a second. So this is the NAS CFD. I have sell. The NAS CFD comes in at 925. The futures CFD comes in at, yeah, it was very different pricing. They had really different prices here on the move. Let's look. Why did the 925 come in? 925. Oh. Hang on. No, that would make sense. Why would that? Why is this not coming in on the futures? This should be. Was it because the? Let me see the settings. It should say. Let me see what I have here. Enabled. The filter is enabled, but the ATR. Okay, so I think I know what happened here, but and unfortunately, there's nothing I can do because you're always going to get tiny little differentials in price. One of the filters that we have in here that kind of generates these signals has to do with the width, of the trend, because we don't want it to be like sort of very narrow trend. And it seems, I think, like that for some reason the CFD, yeah, it's too complicated to explain. I just, you know, because there's a lot of, you know, there's a lot of mathematics behind it. But the point being is that the pricing differential in the CFD versus the NASDAQ allowed this signal, whereas the NASDAQ suppressed it because this shouldn't have been a signal. It's way too narrow a trade. It happens. There's nothing you can do because when you're, you know, that's why I like to use futures. But honestly, you're going to get like 97 out of 100 matches. Sometimes you're going to get pricing discrepancies. Sometimes you will get indicator discrepancies between the two, but they're rare. And it's just the nature of the business. You're going to have, when you have, unless everybody trades uniformly on a single product, you know, this is a derivative of this. So that's why we use futures, because futures are the true price. CFD is a derivative price. So that's, you know. But you're right. You know, you're right. Your signal was a little bit early. It wouldn't have mattered. You know, if you took that signal, you'd have made tons of money. You had a better entry than I did. So, you know, the details are true, but the particulars are different, but the generalities are the same. So, you know, take it for what it's worth. Look at this. So one of the interesting things, you remember when Linda was telling us that sometimes, you know, the 10 o'clock hour makes the bottom. So right now, as we're looking at the price action, this is the bottom of the day, you know, and it'll be interesting to get to watch this level. And if you think this is the trade is kind of done, you know, one of her favorite trades is like, okay, this is the bottom. I'll get long here and just hold for the rest of the day, or hold till like noontime for 30, 40, 50 points on a reversal move, which is also kind of interesting. You know, doesn't always work, and not my kind of a setup, but it's an interesting idea, and we can certainly watch it as an idea, you know, for potential here. I'm looking to see what else we got here. I got nothing. So, we took um, the other signal I missed again because I was just too busy. This was a very good signal, by the way. So this was, and there is the other reason I don't do it is because I really focus on Dow and Nasdaq because nobody trades S&P on the CFD basis. It's just not. It's a very, very popular product on futures, the most popular product on futures, but the least popular product on CFDs. So I usually don't take any trades on ES. But if you, Jonathan, I don't know who's in the room, who the people that Cheryl, all you guys who trade the ES, you had the sell signal here. The entry was 51. We trade that with a 4-2. That was super easy. That went all the way down to 46 before we had the full reversal. So it was a very quick, easy, scalp right then and there for you guys to take. I'm working with Daniel to automate the kind of appointment trade where we can preset the EA during particular time hours. Let it take that one trade, because as you can see, even on a prepared manual basis, sometimes you're going to miss the signals. But if you have the EA working, it's going to work like a machine, and have that working. So I'll let you know how that goes. But that's the game plan. That's the long-term game plan of that. Okay. All noise right now. Honestly, it's just all noise. I have zero signals, zero vibes. I'm kind of tempted to get long Dow, but it's just, there's zero reason. It's just nonsense. Just me putzing around. There's nothing here that I see that is even remotely conditionally high probability. Oh, I know what I want to show you. Okay, so unless you guys call out, you guys watch for sell signals and just type them in the chat. Ask Boris room, because I'm not going to watch those charts for the next 10 minutes. But I do want to show you a super interesting, much more long-term method of trading. And I'm actually going to show it to you on FX because I think it's more leisurely. I mean, we could definitely do it on indices as well, but most everybody trades FX, and this is a way to use these signals in, I think, a much more in a much less frenetic manner than what I do. So let's just go. We'll start with just a 15-minute chart. We don't even have to get more more granular than that. And I put up a video on my, if you just simply type in trend ? You'll get my video, and it will show you this concept. It will describe the concept as it plays out. But the concept basically is this. So when you get a signal, this is on longer term charts. So 15 minutes is kind of the bare minimum that I would play this on. You get a signal here. So I'm long here. This is 1831, right? What you do is you have to create what I call an intelligent risk parameter. And the intelligent risk parameter in this particular price structure is the lowest low of the prior red wave, right? Which in this case is like 1771. So that's significant risk, because it's 71 is your stop. Let's say it's actually 70, because you want to always lower it to the round number. So 1770 is your stop. My entry is 31. So it means I have a 60-point risk in this trade, which is pretty big risk. The way to trade this is there are two ways to trade it. You can trade it single exit, or you can trade it multiple exits. So if you're trading it single exit, I would just simply try to go for high probability close, which means that if I'm coming in at 31, I'm going to go for half my risk. So I need to exit at 60, right? So that's a 30-point move on a 15-minute chart. That's a big move, especially in low volatility environments like we have now. So there are two things you can do. You could say, you know what, okay, I'm willing to take this risk and I'm going to ride it out. Or you could say this is too big a risk, and I really have no interest in assuming like a 60-point stop. So if let's say you only want to look for setups where the stop is on a 15-minute chart 30 points or less, so that you could go for 15 points intelligently, right? So and generally, by the way, you want to do this essentially on the first signal in trend. So when I get to the second or the third, you could apply this, but your continuity possibilities become diminished, because the more signals you have, the less continuity possibility there is. The first signal is always going to be, the whole idea here is we're very good at entering early in trend when the trend exists. And what this does is it overlays what I call a reasonable risk control of that trend entry, right? So, okay, you could come in here. This is a second signal. It's 41. Your stop would be 20. You actually, I think, have a chance to make the 50. You actually do. So you're going for, you're risking only 20 points. Your target is 10 points. It's okay. You actually could have made that 10 points just barely on the 15-minute chart, right? But if you say, okay, my general risk cutoff, I'm only going to take trades. First of all, I'm only going to take sort of first or second impulse trades. And I'm only going to take trades at 30 points or less. Then you have an entry over here at 1804, right? Against a stop, which is the high of 50. So it's already more than, it's actually, what is that? That's you're coming in over here at, no, it's not. It's about 40 points worth of risk, maybe 45 points worth of risk. Is that worth it? I'll leave it to you. 40 points is a maximum reasonable that I would give myself. So in this case, I would be short 9, 50 is my stop, and I'm targeting basically 1790. We have to see if that's viable. So it's interesting. It's interesting to kind of trade it that way. And there's lots and lots of these kind of structures all the way throughout the trading week that you could trade intelligently, right? So here's a sell. This is yesterday. I mean, this is BOC. I would never do this. But here's a good example of if you traded post event. You have a buy signal over here at 2504. Your low here is a lot. Its low here is 80. So it's 80. But you have a significant central bank event, and you may say to yourself, okay, maybe I'm going to take half position, or maybe this is a positional trade, because I really genuinely believe that this is a positional trade, and you reinterpret that completely that way. So you're coming in with a stop at around 2420. You're looking for 40 points on the first move, so 2540, somewhere around here, right? And unfortunately, if you put the stop to break even, you would have gotten broke. You would only made the first target move. Or you could have said, no, I'm going to really trade this for a couple of 100 points because I think it's a positional turn. And you could do it that way. But regardless of how you do it, the beautiful part about this is it creates very, very intelligent risk parameters up front, and you can evaluate if that risk parameter is conducive to what you want to do, given the context of the trade. And maybe you just simply trade much smaller size, or you trade or you don't trade, or or you trade shorter target. But you can adjust your view of the position, or you could simply pass up on the idea if it's not working. I mean, here's another good example. So you short here. Let's just start at this. This is the first sell signal on this 15 trades. It's 57 on the entry. Your stop would have to be 17 or 20, basically. So that's a 60-point stop. That's a big stop. Remember, I said you really don't want to do more than 40 points. Would you want to take that? Maybe you would pass up. If you did take that and you wanted to trade that for a 30-point target, you're coming in at 56. You would need 26, and you actually don't get it. And that's why because the question isn't is this directionally correct? The conditional question you want to ask yourself: is there enough possibility for it to go in the move that I want to go, given the risk I need to assume? The intelligent risk I want to assume. And that's a question that everybody always forgets, because people either just say, "Oh, I'm going to put a risk, flat risk," and that's not an intelligent risk because it'll just stop you out. Or they'll say, "I put some kind of a target, and that target may be completely unachievable given the risk that you're putting in." So the way looking at it like this, in a sort of a conditional evaluation, really creates a much more nuanced analysis of whether you want to take the trade or not. So if you flip the situation around, where you're coming in over here, you're coming in at 24.80, your stop is 40. That's a much more digestible stop, right? So you have a 40-point risk. You only have 20-point target on this thing. Obviously, boom, you're in. That's a much better looking trade than this trade. This trade went in your direction, sort of this trade, but this trade required much larger risk, and it didn't go to your target. This trade did. I guess that's the key thing that I want to show you, is that it's not whether the trade goes in your direction, but whether it goes to your target. One last thing, guys, before I'm going to leave you. We actually have a trade in S&P right here on the buy side. Let's fool around with that. I'm going to take that. It's not something that, as I said, most of you guys in CFD land take, but I'm long 58. Oh, I took this is, and that should be on a 2 target is 60.75. I'm looking for 60.75 on this. So I'm long 58 on this, just 2 points. Let's see if we can get 60.75 on this, on the move in the S&P. That's just my last signal of the day. 60. Let's see if I can rise to 75. I'm looking. Well, yeah, we'll see if that works. Wow, look at that. That really expanded nicely. All right, we'll let that float. I'll update you on that. So we'll see if that works. Where am I? Notice, by the way, remember I said to you this was a day's low. If you'd come in, remember we talked about this around the 40s, sort of the Linda Raschke trade. That would have been a good trade. That would have been a good trade. I mean, that's what 40 years worth of trading gets you. The experience of knowing when there's possibilities. Oh, did that go up? That took me out. Sorry. So that just took me out for a profit. So we got done. So that went for 2 points. I don't know if any of you guys followed me on the S&P, but that was the final cherry on the icing. That was very nice. Thank you so much. Wham bam. Thank you, man. Anybody take the S&Ps with me? Jonathan, Cheryl, where my US crew at? Cheryl, still in the S&P. All right. How come you're still in the S&P? All right. Well, I'll let you float it. Do your thing. You want a 3. Don't. What's my number 1 rule? When you scalp, you can't be greedy. Greediness is only for pigs who get big points. We eat like pigeons. All right, I hope this works out. You took 5 with NAS. Good job. Remember, we're pigeons. We're not pigs. We're pigeons. We're pigeons. Pigeons, motherfuckers. Let me put a pigeon on there. Let's see if pigeon is there. That should be our, no pig. No pigs. Pigeons. There's pigeon? Is there a pigeon? No, there's no pigeon. Oh, there's no pigeon. There's no pigeon, unfortunately. No pigeon thing. It's okay. It may work for you, Cheryl. It may work. It may rally. Let's hope it rallies for you. But we're pigeons. When we scalp, we're pigeons. Anyways, I hope you guys are having fun, because I mean, I really love this whole conditional probability structure. Thank you, Ernie Chan, Mr. PhD in 1,000 different. There you go, Cheryl. You better take this profit right now, or I'm gonna personally come in and close your account. What do I want to say? So yeah, I mean, I just think it's a really interesting framework, especially with the structure and the layout of the trading view indicator. I think, you know, it's very, very cool. So we'll do more stuff, and I really want to do more long-term stuff now, because obviously I think the long-term stuff certainly opens us up to some very possibly interesting ideas on like the 15-minute chart and stuff like that, that we can definitely do. So what else do I want to tell you? I guess that's it. That's it. It's 10:05. We had a good day. We had a very good day actually today. Banked every trade except for one stupid Dow trade, which was my stupid Dow fade trade. But I actually made it all back and then some on the moves. So you know, it all worked out. Thank you guys. Everybody had fun. I had fun too. Everybody had fun. Good job. All the newbies, I hope you guys really enjoyed it. I'll see everybody Tuesday. We got no session tomorrow because I got to do a trading battle with Kathy and Ragi. Everybody, come join us for that, because it's going to be a lot of fun. Hopefully you guys will really enjoy it. All right. Thank you so much, guys. Gracie, Miguel, Connie, Jason, Juan, Brenda, everybody who says thank you, I will thank you. If you don't want to text me, then I will not text. That I will not wave you a goodbye. So text me a goodbye, and I will wave you a goodbye. And we need a pigeon emoji in our arsenal, which I'm going to actually put up. I know how to do this in Slackbot. I'm going to add a pigeon emoji. Cheryl, K. I'm sorry, I'm going to butcher your name. How do you pronounce your name? Caden? Is it Caden? Okay, Caden. All right, that's not so bad. All right, Caden, welcome. Thank you for being with us today. Thank you, guys. All right, good week, by the way. Really good week. We are just spot the F on as far as just triangulating these ideas into super high probability setups. I love the appointment trades. The next order of trades we should all be looking at, and I'll post them out if I'm around, if I can be around. The 15:30, the 3:30 New York time setups happen. I'm going to take them and we'll post them. We're gonna start to really put the appointment trading into play as I think a very valuable signal generation for the room. Okay, guys. All right. So everybody have a great day. I'll see everybody in the trading battle tomorrow. Thank you. Take care.